The Federal Reserve disappoints, offering no big bazooka of its own to keep the U.S. economy going. And the U.S. dollar index trumps the $80 level while stocks try to hold up and commodities head lower. I'm Alex Steele, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call. All right, Scott, so S&P got hit on Tuesday along with everything else when the Fed delivered no big bazooka, no more quantitative easing. This morning we're also hearing that there's an imminent downgrade of France from the S&P that's just crossed the wires a little bit ago. Futures coming under slight pressure. What's the level that needs to hold? What's the line in the sand?
I think everything you just named is the reason why, bulls have not a lot to hang their hat on. Guys who've been looking for this move above the 200-day to get some kind of performance chasing, some kind of short squeeze, they're starting to lose the faith because you have all these negative headlines, and each day it feels like we're losing a soldier in the battle for higher prices. And a lot of people are talking France it's imminent, and if it happens today, it'll be interesting to see.
It was supposed to happen after the bill yesterday too, so you wonder if it's going to be that rumor that never dies.
Right, but it'll be good once it finally gets out there, so we can actually see how the market reacts. And as of right now, as far as the market's concerned, on a macro level, it's still holding up, but there is some negativity in momentum land as we start rolling over. And yesterday, when the Fed made their, just kept its status quo, I think there was some anticipation or some hopes that they would cut the discount rate. And when they didn't and left things the way they were, that's when I think some of the shorts got a little aggressive. We went from up 100 to down 60, and some longs just said, you know what, I'm done with this for a while.
All right, let's go to the chart and look at the level that it did hold yesterday, and then what your strategy is we're kind of now trading around that level today. Okay,
well, take a look at the chart of the spiders. I'll show you there because a lot of guys are trading that instead of the futures. So if you look here, this is the level of resistance that kept stopping the market in its tracks. There's this big downtrend, and then we're starting to get a lot of choppy action in here. Yesterday, we broke below this important level. We held the 50-day, by a thread, but usually you hold it on the first time, but then the second or third time, you go through it. So I think traders are going to watch this level, 122.45. If we start to take that out, I think anyone still in longs will probably get out if it's for momentum. And some people might start to pressure from the short side, thinking that we get a gap fill at least all the way down to this 121 level, which is like a nice $1.50 trade in the spiders as well in some of the other indices.
What's the line in the sand here?
At this point, if you use your retracement rules, we tried to develop the line in the sand the last time. If you go back to this chart, if you guys remember here, remember that reversal that we played, that day to take notice, you had a big move to 1292, and then we tried to measure the retracement levels. And this time here, you had, we held, that 61.8, which was right here after that Friday of Thanksgiving. So we broke levels along the way for the trade to change. So if you do the same thing here, you could see that we've already lost. So take a closer look here so you can actually read the scribble scratch. We've already lost the 25%, and now we're heading into the 50%. The last line in the sand for anything to be constructive, I would think, is about 120.72, and that would also line up to support here on this macro wedge, which would make a low, a higher low, and then a third higher low. So 120.72 is like the last line in the sand for this market to look constructive at all.
Oh, that does not sound very positive. It sounds pretty dismal. But we want to take a look at some sectors again, kind of check the temperature, see if anything is holding up. Want to hit on retail. We were talking about it yesterday, hoping it was going to go strong. Then we had a Best Buy delivering a disappointing quarter. November retail sales also came in light. But Scott, I do have to point out that, we had electronic sales in stores rose over 2%. We had internet sales rising about 1.5%. All of this was good. So perhaps is the damage in the retail sector a little overdone here?
I think retail has just been priced for perfection. There's been a lot of people, including me, saying this is a strong sector. Maybe we get momentum here. So when you had a little weakness and a little strength, the upper level just gave way. So if you look at the RTHs, you will see, some momentum was lost here. We've been holding this upper flag, hoping that we can make new highs. But you know what? We reversed and we broke the support that we outlined yesterday. And now we did hold, this moving average. But chances are, if this market comes under pressure, you could probably buy these RTHs down at this 107, and then this will be the next big support. So the trade just changed from trying to play for momentum to maybe buying the dip for a move that could happen in 2012.
Because I also wonder if there's a bit of danger there in getting too negative on the retail sector, especially because November's store sales are also light, right? Because Black Friday's coming, maybe you want to hold off on purchases. So there's that pent-up demand later in the month. So maybe not as indicative of December holiday sales.
Right, but there may not be, you might not want to get too negative, but you just don't have to chase it. You don't have to be in a tier 2 or tier 3.
So chase it down.
Yeah, so the trade change, now you have to buy maybe the dip into support versus chasing for a breakout. So that has changed, as well as some other sectors. You saw the same thing with the semis. Remember we talked about the semis, bright spot, then Texan pre-announced, then Intel pre-announced, and now it looks like Intel that went from a trade that could break to the upside. Now maybe you buy it versus the 2250, which is support, which now you're buying support versus playing for momentum. Same way with some of the banks.
Right, I was going to say the banks, one of the worst performing sectors of the year. Only about 17 of the 80 stocks in the financial sector of the S&P are in positive territory for the year. That's according to Bespoke. That is pretty dismal.
Oh, it's very dismal. That's why you've only been able to really make money on these oversold bounces. So I remember, 2 weeks ago, we talked about where the bank bounce can go, and that's all it did. And then yesterday, J.P. Morgan, the headlines that they're going to be probed about, the MF Global scenario. So that was some more negativity. So not only did Goldman Sachs, if you look here, break the level we were watching to see if momentum could stay there, which was right here. Once it broke the support of 99, that said, we could be in trouble. J.P. Morgan, who is supposed to be the class of the group, breaking its lower level. So it's just like there's not a lot of things to hang your hat on. So if you're a macro investor, tier 1, if you're a trader, we went from trying to be like neutral to positive to maybe neutral to negative.
So now looking for those opportunities to possibly short. Okay, so I want to wrap it up here with tech and the OIHs. Any hanging hat here? Well, congratulations on the OIH, by the way. I know you went head-to-head with Jim Cramer on Mad Money on the charts yesterday.
Yes, he liked the technical pattern. I think they liked the fundamental thesis, so we tried to put a technical pattern on top of their 2012 fundamental thesis. And I still see the inverted head and shoulders pattern forming. If you look here, it's in the process of accumulation in the right side of this neckline. You can see it here. He explained it really well. This is the left shoulder, the head, the right shoulder. I tried to break it up into a tier system because, again, this is your tester phase. This is get involved, watch it a little bit, maybe in this, 110 to 115 area. But if we just start dribbling lower and we break below 108, the pattern's void. But if we hold here and it goes under accumulation and then starts to work in 2012, here's where you add your tier 2, here's where you add your tier 3, maybe you sell some here along the way, and then it does take 6 months to measure that move, so that's why it's a long-term pattern, it's not just a quickie.
And Jim had a little bit of a different thesis, right, sort of sell on the way up, take the profits, and buy on the way down.
Right, but momentum traders like to buy high and sell higher. So right now is you're buying the dip, which sometimes a dip turns into a huge dip, so you don't want to always average down because averaging down could have you explode. So if you buy it all the way down, you never really know where that bottom is. At least if you buy it down and then it starts going higher, you know your levels and your points of reference. All
right, and we'll be right back with some momentum stocks like Apple and Amazon right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, so we just talked about some ETFs and some sectors that kind of lost some momentum, some mojo here. Let's look at some of the stocks. Want to hit on, where am I? Chipotle first. Where does it need to find support? And could it be, at some point, a really good long for somebody who was interested in the stock?
The stock has been a mover, something that has momentum, but we've seen so many momentum stocks lose momentum. So I won't say it's done that yet. But yesterday was one of those small days to take notice. This was a candidate to make new highs if Santa Claus came, which he might not. So if you take a quick look at the chart here, you will see that it was near this upper level of resistance, maybe thinking that it could break through 350 yesterday. You did have a potent down day. It did break this short-term ascending channel. So now I think if it's opening flat, some traders might try and trade this short through this 328. And then I do think it would be constructive if it can hold 322, and then it really has to hold the lower end, which is this uptrend that's been intact for a while, which is around 312.
What does it say to you that we're seeing momentum leaders kind of lose steam here? Do you think they're going to drag the market lower and they're indicative of a lower market, or do you think that the traders are just kind of out of it right now?
It could be that people are looking forward and they're saying that we're just going to muddle along, that there's no super high growth, and that energy is leaving the market because you need to have the best, sexiest stocks break out in order to have some excitement. And right now, I don't think anyone who is a participant in the market is very excited. All we want is no calamity. So what's important is when stocks are working and they change composure, you have to realize that And right now, if you look at that like Amazon, let's talk Amazon because it's on the list.
I was going to say, though, before we go to Amazon, is Chipotle. I mean, still up, over 50% for the year. So also fund managers might just need the profits to book them rather than try and hold on in this down move.
So then protect some of your profits. If
Right.
you're in a tier 3 and you were playing for momentum, the momentum is lost. Go back to what you're trading for, which could be a move later this year. So you take some off and you protect. Maybe you sell some in the money calls for extra premium. But right now, yesterday took some momentum out of the trade. If today it all of a sudden takes a day back, you know what, your thesis could continue. But yesterday was, just a slap in the face of what momentum traders were looking for with Chipotle.
And you brought up Amazon, really getting hammered by lack of momentum. You're down almost 5% yesterday. Seems very extreme again, considering that internet sales were actually up 1.5% in November.
Well, the charts don't lie. People said the same thing like with Netflix and some of the other ones, but obviously Amazon's different. Amazon had the earnings come out, and there was a huge gap. Okay,
And the Kindle's not been doing really well. Yeah.
Well, also the Kindle is priced to not make money, just as a loss leader. So, but the chart, if you just looked at that and not the headlines, it showed you a lot of different ways to get out of Amazon. Here is the earnings. Remember, the last few times earnings, they've gotten a pass, not this time. It tried to bounce up, went sideways, didn't fill this gap, and this was your sell signal. A lot of traders made money short here, so you had to move back down to the lows. Okay, it was below the 200-day. So what happened here? A bounce back to retest the 200-day where it failed. Ascending channel, broke to the downside. And on a micro level, it's been a really good short, and now a little scary here. On a macro level, if it starts to not bounce and break below this support area, Amazon could see 160, especially if the market starts heading lower.
And talking about then in the same vein, Apple, we look now 360 again versus a 400.
Yeah, and that's exactly the case. We had a bull flag going sideways, market not sure whether it could continue above 396 or start breaking down below. And if you look here on Apple, this is the level that I'm going to be watching. Here is that bull flag, right? They had a few nice trades here. Remember, we shorted when it broke below this box, held the 200-day, had a descending channel, broke to the upside, and then we weren't sure whether or not the market would continue. This red bar to me is ugly. If we start breaking below yesterday's low of 387, you could have a 7-point short to 380 and then figure out if it could hold this trend line. If it doesn't hold this trend line, you have the 200-day again.
So are you shorting Apple then? Because I know you like to go long the stock.
I went short it yesterday.
Okay.
I'm flat, and if it starts breaking below yesterday's low, I will probably short this, and then maybe see if I can cover some and look long, at those lower support levels.
And then last stock I want to hit on is Intuitive Surgical, because we spoke about it on Monday. It was a great trade, like a stone's throw away from 52-week highs, and then it lost steam. Is all the momentum now out, or is there another trading opportunity?
I would say it's on hold. It opened up $8 with that really good news that it had, and they sold it. So in bad markets, they sell good news, they sell breakouts instead of sustaining it. So when they don't sustain it, you have to be a bit careful. Long term, guys are making a lot of money here, and maybe at another time when the market's stronger, it can go. But if you look at the chart here, this is a red flag to me, where you have a nice tight range, but obviously we're really above all the moving averages. It's still very strong, but a little bit of a tail. That means it rejected this downtrend, and now it's holding support here. I would say if this breaks below, this what is this, about 431, you could have a move down to the moving average of 418. So the trade changes. Instead of looking for momentum, maybe you buy a dip in a strong stock. So that's what you have to realize. If you have a macro view and you're in it for the next 5 years, which I don't think anyone should think about in the next 5 years, fine. But on a micro level, you were trading for Santa Claus, you might not have to and be able to buy a dip there.
All right, we have 6 stocks we want to hit on that might make good trading opportunities for today. The first one I want to hit on, Scott, First Solar lowering guidance for 2011 and 2012, just getting hammered in pre-market here. We're looking down to 20%. Is this going to be a cool trade for you today?
It could be, because I'm flat. Yeah, I've been talking how FSR has been broken since 100. It's like a concept stock, and obviously in a market where big companies that make money can't go higher, why is a concept stock going to go?
Well, it is solar, so.
A little bit. Unfortunately, Buffett came out with news, right, and that he was investing in a plan, and it gave some confidence there. So now all those people who bought on that news that Buffett might have confidence there are underwater. So if you look at the chart here, it could be something for the active trader to watch. Okay, right now, we're opening below the recent low here of 40, down to like 32. So at that point down here, the only way I would trade this long is let it put a low in. Just say it puts a 30-minute low at like 34, trades off that low. You use that as your stop. So, you buy it at 34, you use 32 as your stop, and maybe considering, it's a concept stock, they're not worried about their earnings or this and that some people come in and buy it. So it could be something for a cash flow, but as an investor, I would stay away.
All right, let's go to Goldman Sachs. Dick Bove strikes again yesterday, cutting earnings estimates by 66%. Is it too late to get involved in this kind of trade?
I hate when that happens because he upgraded the stock, not to call it at like what, 118 after a move from the low 90s. So I was like, what's he upgrading it now? So now after a move down back to 95, he's going to cut it. Where's the value added there? Anyway, if you look at the chart of Goldman Sachs, you'll see it's been a good barometer for us. So if you take a look at the chart, which you already are, okay, this was your oversold bounce. By the way, this was the last time Bove upgraded Goldman Sachs. It gave us clues about market weakness last time when it broke this uptrend, and now it held higher, so it was a good trade, and it made a lower high here. So
should you actually be buying now?
Maybe let's go again. I don't want to start talking too poorly about the guy, but anyway, 93.30. Yesterday's low is the level to trade against. If it starts breaking below there, the market's that weak. Sometimes it'll break below, come back above. So if that's the case, then maybe buy versus that area. So you're buying a pull-in, but it's hard with any of these banks.
All right, let's go to Las Vegas Sands, actually, because Fitch had a mixed report for casino operators for 2012, saying that the success is really geographically based. Those based in Las Vegas, the Strip, those based in Asia, and Wynn and Las Vegas Sands were the two that Fitch named that have these strong geographical fundamentals. But you like trading LVS?
I do. I like to watch it. Lately, Wynn has been a short. It's been broken. So it's another reason why I'm getting a little negative on the market, where these strong sectors like the casinos used to lead have been leading us lower. So that's an indication that maybe we do have some downside. So if you look here at LVS, it's still in this macro channel, but it's really not compelling. It's just very whipsaw. This is that macro channel going sideways. I think Barclays also put it as their stock for 2012, but on a short-term basis, it's just a mess. Okay, so it broke below support. I would watch it at 40. At 40, maybe I'll try and buy it for an oversold bounce, but that's the next level of support to watch.
All right, Caterpillar down almost 2.5% on Tuesday. In the news this morning, selling parts of its Bucyrus distribution business for about $360 million.
Well, this was weak yesterday, and this was also a clue why I thought maybe we could fail. At this point, there's support to watch. If you look here at Caterpillar, it couldn't break above resistance just like the rest of the market. We were watching to see if any momentum would come in. It didn't, and now it's starting to head lower. It's at this moving average, which is pretty important. I don't think it might hold, especially if the market gets weaker today. I think you buy versus support down here at 85. That's your important support to watch for Caterpillar.
And how about Apache, one of your favorite oil plays? We have that OPEC meeting today. I'm hearing that it's not going to be any big game changer here, but how's the chart looking?
There's the nice descending channel in Apache, which it tried to break above yesterday and failed. If you look at the chart here now, fundamentally it looks good. Technically, it's still caught here. Okay, I won't be a buyer of Apache until it gets above this 96, because that shows me it's starting to work. And if you don't want to buy it for momentum and you want to look to buy a dip, here's your level of support that it held the last time. So either you buy a dip versus 85, or you play it if it starts working above this 97.
And rounding it out here, what about Baidu? If you're talking about momentum stocks.
And Baidu was weak yesterday, and it's been trying to build this macro wedge, and it reversed hard yesterday. The Chinese sector, the Chinese internets have been just really pressured lately.
But if China eases, do you think that Baidu and the likes of them get a really big pop?
It could. So let's take a look at the chart. You look right here. This was the last time you had an ascending channel with a flag type pattern that broke to the downside. You just retested that and made right into resistance and sold off. Pretty potent down move yesterday. Watch this 120 if you were looking to buy a dip. This is the area. If you're short, maybe this is an area to cover. But if it doesn't hold 120, there's a lot of room down to those lows, so just be careful with Baidu.
All right, and then rounding it out here, I think the theme you can take away is that discipline is definitely key. And I think that specifically now applies to gold. If we look at, it's coming into the 200-day moving average, hasn't been there in a long time. As a trader, how significant would that be for you, and how would you be trading versus that?
There are some guys that have been shorting gold. What I would tell them is this is a spot to take short-term profits. I would say cover your shorts at the 200-day. If you're not long, this could be an area to play it for a bounce. Sometimes it could be a small bounce, and sometimes it could be sustained. So if you look here at the chart, I'm going to watch it today. I haven't traded it really in a while. Here's one wedge that broke to the downside. You had to retest right back to where it broke, failed again. Another macro wedge, broke below it, but we're coming right into some really big support here. So if you're short, this 157 down to 155 would be an area to take some profits. Also, if you want to test along, this would be a spot to watch. And this is a spot that I'm going to watch, potentially get long short term and then see if it could build.
Also want to point out that yesterday, even though gold sold off 20 bucks after that Fed meeting, no ounces shed in the GLD, so it is finding some buyers. All right, well, that's it for us for today. Happy Wednesday, everybody, and happy trading. I'm Alex Steele from The Street.
And I'm Scott Redler. So if you want to follow us on the virtual trade floor in the chat and get some indications of what we're doing intraday, please tune in. And if you can intraday, go to the recap. We'll tell you what worked and maybe what we'll be looking at tomorrow. Happy trading.